Hello, traders. It's 8 a.m. Chicago time. It's on the Tuesday, the 16th of July, 2019. Thanks for being here again. You're either a glutton for punishment given yesterday's action, or you're a true market wizard and just can't miss a tick. I'm good with either direction. This is episode number 1556. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. This morning, there's not much to say here. In case you did not notice yesterday, by any chance, the volume was absolutely abysmal. We were down approximately 45%, 45% on the what we would consider to be the expected volume of 1.1 million in the RTH session. Yesterday, we only generated about 623,000 contracts, almost half. So summer's in full force here, and we see it in the overnight action as we move forward. It seems like we're either flagging and consolidating in the equity futures, or we are starting to see the signs of buyers not wanting to step up and bid prices up and seek those sellers at higher prices. So this is where we are. The overall sentiment is very, very mixed this morning. Gold is pretty much unchanged. The S&P is unchanged. The Bund is almost unchanged. The Dow is almost unchanged. The Dow's up just 7 points, which is within one rotation. The DAX is up 13 points, which is within one rotation. And the Euro Stoxx is up 9 points, which is almost within one rotation. Crude oil is higher after breaking below $60.14, a key support resistance area for me in my time frame. Trading at 59.84, up 26 cents, and the British pound is down with the bonds. The bonds are down 24 ticks, which is relatively significant, and the 10-year is down 11 and a half ticks. The Russell is down 7 ticks. So there's not going to be much to say here this morning other than it's pretty lazy. Looking at what's likely driving the markets today, I'm not able to glean anything substantial. There's nothing on the news feed. We did get advanced retail sales this morning, 7.4 versus 7.2, 0.4 versus 0.2. Retail sales ex autos is 0.4 versus 0.1. We also got import prices at negative 0.9 versus negative 0.6. Both of those are bullish. We also had Wells Fargo, JP Morgan, and Goldman Sachs reporting this morning, so keep an eye on your financials. The XLF ETF is a good indicator on that. In addition to that, we got a couple more blue chips, Johnson & Johnson, and so on. So we're in the full swing of earnings season, and that's likely to impact some of the trade. Although we're still addicted to Fed crack. Overall, looking at today's calendar and what's scheduled, there's plenty here to deal with. We did get the German zoo figure this morning. It was worse than expected. The EU zoo came in just slightly better than expected. And looking ahead, we do have business inventories at 10 Eastern, NAHB housing market index at 10 Eastern as well. Those are fairly low tier figures, low impact figures. But Fed's Bostic starts at 10:05 Eastern, Fed's Kaplan at 12:20 Eastern, and Fed Chair Powell at 1 p.m. Eastern, with Fed's Evans at 3:30 Eastern. It's a parade. And then after the close, we have the API crude stock, which API crude stock change, which could impact crude oil for those who trade that product. So that's where we stand. Really not much more to say there. Let's take a look at our review segment. Yesterday, what I did expect is another open auction out of range, just like we saw on Friday. Expected an open auction out of range that may move lower into the prior day's high at 2018, and then squeeze up. The key figures were 2014, 2024, and 20. I keep saying 20. I'm just not accepting that we're in the 3000s. Um, the key figures, well, below us, the test is 3018. The key figures above are 3024.75 and 3027.75. And I expected it to continue on its merry path upwards. What it did do is somewhat of what was expected in scenario two. Uh, it had an open drive on the open. So here's what actually happened. It had an open drive down. What does that mean? Essentially, the high tick or the opening tick is the high tick. So as soon as it opened, boom, somebody came in at a higher time frame probably and just squeezed the heck out of it to the short side, brought it back into the range. It tested the prior range high for a little bounce towards mid. Mid is it's too early for the mid at this point. This is just a couple minutes in. We put in this low, rotate back up to the prior day's high, and then it is like a uh, death chop. It's a sausage making fest here, chopping around, lots of chop, 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 chop. Okay, and for the rest of the session, we ended up with an excess tail at the top. So this was an excess high. This was a rejected high, which we are we tested overnight. We have an excess high with a relatively tightly balanced profile. Yesterday's profile was exceptionally balanced with a very, very exceptionally tight value area. And so the value range of yesterday is way on the low end of the scale. So what we have is some extreme coiling going on here. However, as I said, bring up the figures. Only 623,000 contracts traded versus 1.1 million normally in the RTH session. There was just no participation and no interest in yesterday's trade. The only thing I saw in terms of a trade is when we got this expanded move down for pullback to mid with confluence against the prior day's high, and the best it could do is just an equal low down here. Not exactly the type of trade I would have liked. My target for any short was the point of control. As I mentioned in scenario two, that was what I was looking for. And given the open drive nature of the open, it really seemed like it was well within range, well within expectations to actually get that. And it just could not handle it. So it is what it is. It's summer trading. This is expected. This is I would say 9/10 of our job is that they say the 9/10 of trading is psychology. Once you get over that hurdle, 9/10 of the discipline is restraint, is patience. And so it's given that it's summer trading here in the middle of July, we are definitely experiencing a lot of that. So here's the overnight session. The overnight session stayed right within the initial balance of yesterday, um, and which was relatively tight. The initial balance being 3014.50 up to 3021.50, and essentially we've stayed inside that except for a one tick test over here. And that's it. It's set sideways. The volume is not too bad, 145,000. It's in line with what's expected for the overnight session. But what we have is some extreme kurtosis here, very, very skinny. Most histograms, as you know from your textbook and on statistics, most histograms kind of look like this. Um, and what we see here is a high kurtosis histogram, which looks like this. Okay, and that's so laid on its side, and that's what you have here. So what this shows is a ton of coiling going on, especially since the volume is actually normal. But again, this is against all-time highs. We have to kind of lean towards the long side just on a bigger picture. And as we move into smaller time frames, there may be opportunities to get short. But listen, we have not rejected these prices as unfair. That's the biggest thing we got to take away from this. These prices don't seem unfair. Yesterday's low had a double TPO in it, in market profile. It had, which actually those two TPOs were made kind of within the close of a 30-minute bracket, but it was still a very weak low. But this morning, let me put it this way. I'll summarize this whole thing and kind of let you guys go. But let me put it this way: the market today has to prove to me, what it wants before I will take a bias and engage. Okay. So this is important because I don't want to sit. This is the kind of environment where we as traders are going to invent trades. So you don't see trades in your time frame, so you start to consider your buddy's one tick time frame. You start to zoom in and see if the moving averages can tell you something, and you start to kind of zoom into every bar and see if you can glean. Oh, look at this bar, it's a higher high, I better get long. It's let it come to you, let it prove to you, let it talk to you and tell you that it wants a certain direction. And I use some simple tools. I don't use indicators for that, and there's nothing wrong with that. But I use some simple tools, the key of which is where's the volume trading, so that's the volume profile. What's the condition of the rotations, and how is the order flow going? Those three things, take away everything else, take away all these lines from my chart. Those three things basically educate what I'm going to do next and what's likely to happen. And my plan is to just find the side that is probably going to be dominant and within a reasonable probability, and then trade from that side. I have a much better chance, even if the market breaks higher and I get long and I get stopped out. I still had a much better chance. If I did that 100 times, I still have a much better chance than somebody who comes in and shorts the market as the market is breaking higher because they see it topping. Okay, so that's the game is really, it's a long game. It's about many samples, many trades. Just let go of the last trade that didn't work, because that trade is imprisoning you from seeing the next. And today is the kind of day where the market just needs to prove what it wants. So we'll get past that. One thing I wanted to make sure everybody knew is that there's an AMA on Thursday at 4:30 p.m. The link is right here. The link is also, I'll drop it in the chat box here. And it's also in the YouTube video description. When you go to the YouTube video after you've watched, you can find the link there. It's also on my Twitter feed. And I suggest that even if you're not attending, to register. It tells us that you want the video recording, and you'll get the recording. You will not be getting any spam or anything like that. So make sure you register. And let's move to the current conditions, or what's expected. Now, if we look at this market, we see it kind of tiptoeing up, right? So here's a massive, a pretty decent range, balancing out, 20 points of range, 20, 25 points of range, very sweet. A consolidation, break higher, attempt lower, and then they end up resolving to the upside Thursday, and then Friday makes new highs. Yesterday, sideways. So the narrative here is that we are one time framing up still and heading higher. and looking to be heading higher. There's some capitulation given yesterday's action. And so we kind of need to be cautious, and that's why I said today it kind of needs to tip its hand to me. Unfortunately, I have to do this. I have to actually zoom in to the range here to see what's going on. But essentially, we are opening right in the middle of this profile. We're opening imbalance, so in range, in value. Well, we're up here, we're just out of value, but we're opening in range against this excess high. The expectation is it likely make an attempt higher. I'm expecting an impulse down, consolidation in the middle, and I'm looking for the low to break. Yesterday left a weak high, and this may start us on a one-time framing down spree and a push down into 3,000 again from here. This is what I'm looking for today. I don't have high expectations for range. At best, probably 12 points or so. That's the primary scenario today. I'm looking for it to kind of start rotating over. Now, remember, my mind is not set here. Doesn't mean I'm going to look for shorts and stuff. But if we do get shorts, I'm looking for 3014 as a tangled area. So I'm going to scale out for risk there. And then the next big area down, I'm going to look for is 3011 and 3010 as key targets. The secondary scenario is an open that tests lower. And by the way, yesterday we did not breach the overnight high and low. So that stat, which is about 98%, we ended up holding the 2% side of that stat. That's how kind of jacked up yesterday was. The secondary scenario tests an open auction. It opens at an open auction in range. It tests lower, and then it attempts higher, and it just basically holds yesterday's range sideways. Generally, Tuesday, especially with Powell speaking and these other Fed presidents, we expect something. But overall, again, low expectations for summer. If we do get a push based on comments that I'm looking for, again, 3027 as a key test area above. That would also be scenario two. It's just how far does it go, right? So that's what we're looking at. Again, I want to remind everyone there's an AMA on Thursday at 4:30 Eastern. Even if you're not attending, please register so we can send you the recording. Okay, you can pre-submit in this page on this link. You can pre-submit your question, and we'll organize them into categories so that it can be very succinct. Good luck today, and I'll catch you tomorrow morning. Take care.